Global market shocks caused by Trump tariffs have now spread to impact deals in the private equity segment. Amid these volatile times, investors have adopted a wait-and-see attitude when it comes to new transactions. But some find a reason to stay optimistic on Southeast Asia. CNA's Olivia Marzuki finds out why.
Volatility in global stock markets due to tariff uncertainties have clouded the outlook of private equity investments. Fund managers that invest mainly in private companies have turned more cautious and are reassessing their investment strategies. A market downturn could mean potential delay in cashing out from their financial bets. It may also impact their returns.
So delay in the private equity could come in one of two ways. It could be delay in terms of investing of the capital that has already been raised, what we refer to as dry powder. And given some of the volatility in the global events of late, it is possible that investment slows down a little bit as investment committees of these firms try to determine what thesis and with what 5-7 year deal model they're able to back.
After a few tough years, Southeast Asia's private equity market roared back to life last year. Deal-making value surged by more than 60% to hit $16 billion, in line with a broader recovery across Asia-Pacific.
There were a few big deals that got done last year in Southeast Asia, and so that helped that number go up a little bit. But that's still actually below levels that we saw pre-COVID in 2018 and 19. And it's definitely actually lower than what we would like to see in the industry, given the size of the industry and the amount of capital being deployed. So good that it's gone up, but we would like to see more.
Singapore and Malaysia powered a 30% jump in exit value in 2024. But with the new U.S. tariffs and other challenges on the horizon, older portfolio companies are on the lookout for a viable exit strategy.
Well, obviously, investors like to see exits. They would like to see more capital return rather than less. I think what I would like to see is more of the relative trend improving over time. It's quite lumpy. It's based off of one or two deals getting done in any given year. What I think we'd like to see in the industry in Southeast Asia is kind of a continued growth in that number.
Amid the global trade war, macro risks cast a shadow on private fundraising activities. But industry watchers believe there's a reason to look at the glass half full when it comes to Southeast Asia.
Well, I think the future continues to hold promise. As an asset class, private capital in Southeast Asia remains underpenetrated compared to global benchmarks. The constituent components of attractive businesses with opportunities for growth, with entrepreneurs who are looking for outside counsel on how to do that and who need capital for that growth all exist. So I think over that 5 to 10 year period, we're going to continue to see tremendous growth in private equity as an asset class. In the short term, obviously, there may be some bumps along the road, but in the long term, this is the right place to be.
Among the promising sectors in Southeast Asia, private equity investors favor digital infrastructure and defensive industries like healthcare and education. The experts also pointed out opportunities in renewables and solar energy as some of the bright spots.